Stocks hit another record high today, above 6,200 for the first time ever, but it's been bonds and gold and even real estate stealing the show today. So are we rallying, or is there something, is there a little rotation going on? So if you want the full breakdown, as always, and today's trade idea, watch the full market outlook video at marketscholars.com in the link down below, in the description down below, or in the pinned comment. The S&P 500 closed at a new record high again today, gaining over just 0.5%. But the leadership behind the move, that's what really stands out. Bond prices climbed, gold rose over 3,300, and even real estate, a little bit of a bounce here late in the afternoon. You can see real estate posted another solid gain. This is not your typical bull market profile. It looks a little bit like a defensive rotation here in disguise. So technology and communication services posted some modest gains. I mean, they outperformed and a little bit less than 1%, but still pretty decent gains. While discretionary and energy were our big laggards again today, especially energy. So risk appetite continues to narrow even as the index itself, the SPX here, pushes up to new highs day after day. So the headline says bullish breakout, 6,200, 6,215 actually, closing at 6,205. But beneath the surface, it seems like smart money may be hedging here. This divergence is something that we'll be tracking closely all week as we head into the holiday. So again, above the surface, headline level, markets are bullish. Great. Below the surface, doesn't really look like the bullish rotation that you normally would see. As always, if you like this kind of breakdown, if you find it helpful, make sure you like the video down below with that thumbs up, subscribe to the channel, hit that bell so you're notified when these are posted, share it with a friend who likes to watch the market every day just like you do. It helps our algorithm, of course, and gets more traders more informed without all the noise that you hear. All right, now let's dig a little deeper into what the market is actually telling us beneath the surface. Today's gains were led by technology. You can see up here almost 1%. You can see a nice good chart. It's showing 22% gain over the last 3 years. But you're also seeing, some good, decent returns in staples up 0.5%, healthcare up 0.2%, utilities up almost 0.5%. Those kind of defensive areas, which had been kind of neutral, all bouncing up today, whereas, discretionary was down, finished in the red 0.5%, not failing to really break out of this sideways trend it's in. And then energy is showing a dark pink shading. It's actually, we're falling below the chart's midpoint on the chart here and below the moving average with a 9% decline over the past 3 months. This is a clear sign of risk-aware positioning, buyers are stepping in, but they're starting to kind of come down here. Instead of up here at the top, they're coming down into some of these sectors here at the bottom. You can see that caution reflected a little bit in the VIX rising up 2.5% today, coming off of, every day last week going to the downside and jumping up, even though the S&P. So on days where the VIX is up and the S&P is up, that's a little bit of a yellow sign, right? The yellow light flashing on the light switch there. Interestingly, bonds rallied too. You can see climbing up above the point of control, climbing up nearly 1% as yields drop. This is a classic defensive intermarket signal, showing demand for safety, even as stocks and volatility tick up a little bit. So we're seeing this interesting blend, here's a chart of gold, of higher prices on stocks, but also rising fear to a small degree and some demand for protection, whether it's bonds or gold or the VIX itself. It's not panic, but it's not necessarily like blind optimism either. So the bottom line is the market's moving higher, but under the surface, some traders are starting to rotate things around a little bit, hedge their bets. That backdrop opens the door for selective trades if you know where to look, like we did today in the full market outlook video when we looked for a trade that wasn't in your traditional large cap, mega cap sectors. It kind of aligns with what we're seeing here with what sectors actually did well today. That kind of market posture where stocks rise, but there's risk signals flashing yellow, creates some very specific opportunities if you know where to look. hence the what we discussed in the full market outlook video, which I break it all down, full chart setup, sector alignment, intermarket relationships, what strategies I'm looking at, and all of that's inside today's full market outlook video. Again, over at marketscholars.com with the link down below in the description and the pinned comment. It's exclusive to our foundation members and higher, and you can join today for just $29 a month, less than $1.40 per video, to unlock that full analysis. Catch the replay anytime and stay ahead of tomorrow's open. Thanks again for watching. Have a great rest of your Monday night, everybody, and we'll see you tomorrow.